Hi, this is Carrie from the Bay Area Short Sale Angels, Northern California's #1 short sale team. Recourse or non-recourse loans on your primary residence. Recourse loan means that the bank can come back after you for any unpaid debt, regardless if you foreclose or short sale. Non-recourse means that they can't. California is a non-recourse state as long as the loan was taken out as purchase money. So that means that the money, whether it's a first or a first and a second, was taken out at the origination of purchasing the property. Now, let's say that you got a loan, you got into your property, and then a few months, a year, a couple of years later, you ended up getting an equity line, a second loan. That second loan is a recourse loan. So if you short sell, what does that mean? What that means is that if the bank decided to, during a short sale, as part of the approval process, they can ask to have the homeowner, the seller, you, sign a promissory note. Sometimes for the amount that's owed, sometimes for less than the amount is owed, but this becomes a negotiation piece. If there is a true, really hard, difficult financial hardship, we can almost every time knock those down to zero or negotiate to have a cash contribution in order to get it written off. So how much have I seen forgiven? We've had people with a $250,000 equity line, which was a recourse loan. The bank came back and said that they wanted a promissory note for $150,000 on it. The seller, there was just no way that he was going to be able to pay that. He had medical bills. He had like over $60,000 in medical bills, and he would rather just declare bankruptcy and make it all go away. We negotiated with the bank, got it down to $5,000 that he had to pay at closing. And no, it wasn't just one negotiation got it down to $5,000, but through the course of the negotiations, it went down to $50,000, $20,000, and then we finally were able to have him borrow $5,000 from a family member in order to make that cash contribution at closing in order to satisfy the second. So, if you're concerned or worried about whether your loan is recourse or not, the first question you ask yourself is, was that loan taken out when the property was purchased? If it was taken out later, are you going to still be stuck with that amount of money? If you go into foreclosure, they can come after you later. Later, after the economy improves, after people have jobs again, it's probably something that we're going to see. Who knows? No one can tell the future, but it's possible and they're able to do it. Through a short sale, you can get that second loan, that recourse loan, negotiated down to a smaller amount in a promissory note, or even have it go away by bringing cash contribution to closing. This is Carrie from the Bay Area Short Sale Angels, where we believe that there's nothing worse than doing nothing.